a prolonged war, which I don't think is in the cards, and I don't know, seems to be probably the worst thing because we would be directly involved in it, and 20% of the world's oil supply flows through the strait. Hey, it's KP coming to you live from Corona, California. A little bit after 9 p.m. here on a Monday night. This is usually the longest day of the year for me. Our senior management meeting was today. It's the first Monday of every month. It's a pretty long meeting, and today was shorter than normal. And then Mondays are always long. That's when I get my video out here at night. So I guess that's a sign of efficient markets. But there's a lot to talk about, so I'll get into it. Happy Passover and Easter for those that celebrated. And those that have kids on spring break like our four, I'll pray for you. So the market is fixated on the Strait of Hormuz, but it is temporary, right? Are we going to war? Are we not? Are we doing a ceasefire? Is it going to last forever? It's not going to last forever. Most geopolitical events do not. Now, a prolonged war, which I don't think is in the cards, and I don't know, seems to be probably the worst thing because we would be directly involved in it, and 20% of the world's oil supply flows through the strait. But I think that since the Americans and Israelis went in, I think the rest of the world is looking around saying, hey, wrap this thing up because you're hurting our economies. So I don't know if that it is what's motivating this administration, but I feel like if there is some kind of seizure of the strait, Carg Island and a land assault, that the market surprisingly might say, hey, that means the end is closer, than a 45-day ceasefire. I don't know what these 10 or 15 points or whatever all these points are that the Iranian regime wants or administration wants. I don't think anybody does, but I know that the longer the strait is closed and we have less oil flowing, the more people get skittish about a lot of different things. Now, historically, we can survive in America, higher oil. It is typically seen when geopolitical events happen as a temporary shock to the system, and always has been said the cure for higher oil prices is higher oil prices. So if people just have to pay more for gas, they'll spend less on other things. Most people don't have infinite income. And so you'll see this trading of goods and services for, gas to get to work and do whatever. So we'll see how it all plays out. I mean, obviously, rates have gone up, but having said that, it's purchase season. And overwhelmingly in our industry, purchase business dominates. So our stats from last month, we had our second best month really since COVID. And last October was a great month for us. And we got just a little bit under that, and locks are up again in March. So April's looking pretty good. We're a multi-channel lender, so we have a good pulse on what's going on. And I read in the Crispin blog from Friday morning that agency mortgage issuance rebounded sharply in March, surpassing $116 billion. That's in 1 month, the strongest March since 2022. So that's a big month. That's a good sign. How long will it last? I don't know. I started following Polymarket on Instagram, and ICE, the Intercontinental Exchange that owns ICE Mortgage Technology, also has a big stake in Polymarket, and it's really a great place for news and memes. And I saw some Polymarket bet, since Kim Jong Un is kind of taking a step back as a North Korean leader. Not really coming out and, saying bad things about the United States and, not really selling weapons, if you will, to Iran to support their regime. That the odds of Kim Jong-un and Kim Jong-il or whichever, I can't even remember which last name he is, but the latest leader and President Trump meeting this year have gone up. And there's a funny prop bet. When they shake hands, are you in the 6 to 10 second crowd? Or are you in the 15 second or more crowd? So, but not a laughing matter. If we go in there with troops on the ground, there will be mines, there'll be IEDs, improvised explosive devices, and we may lose some more servicemen and women. And you have to think about the sacrifice that we're making to try and stabilize that region. So we're all watching. I have no idea what's going to happen with this deadline, if it's going to get extended. I did a video last Monday, and I said, has the market found the bottom? And I was referring to the stock market. I'm not a financial advisor, not responsible for your losses, only your profits. But what's interesting is, that kind of 5,300 range, I think it was like 53.37, is that the bottom? We have earnings season starting soon, and companies are going to come out and say, hey, we're making money, but here's how higher oil prices will impact our sales going forward and profitability. So if we get some of that forward guidance, it could change the stock market dynamic. Or we may have put a higher floor technically at 6,500. I don't know. So we'll watch out for that. The Treasury yield range, the 10-year Treasury, which really marks where rates are, it's going to be pretty hard to get below 420 at this point. That was a pretty sticky line technically. It may take some months to work through all the fears that we have, and I'll get into all of them in just a minute because there's a lot. There's like three major ones. So, if the 10-year Treasury's gotten like around 444, maybe it can get to 450. I'm not really sure. There's a higher mark, obviously, in 464 and 475. But we've been there, and we've grinded through it. That would be tougher. The volatility in the Treasury market has caused mortgage spreads. That's basically a number between the 30-year fixed-rate mortgage and 10-year Treasury yield. Has gone up about 30 basis points since this conflict started a little over 5 weeks ago. So 30 basis points in our average 30-year fixed rate is just because of volatility. And so if that subsides, you don't need a Fed rate cut. You could see rates get better and hopefully close under that 432 range. So we'll see. I don't know the future, but I know later on this year, you got to think this conflict will be resolved. I mean, nobody wants 20% of the world's oil supply handcuffed. And so you got to think there'll be something, whether it's military pressure applied, bombing, infrastructure in Iran, such as, their power plants and bridges or whatever, to get them and apply pressure to get them to come to the table. I don't really know. I know that Israel has attacked today some of their largest chemical plants, taken out something like 10 to 12 billion in revenue from the Iranian regime. I don't know who's over there leading it. I heard some military officials that are part of the Iranian National Guard got taken out. So pressure keeps getting applied in this negotiation. And, they have leverage, we have leverage. So deleveraging, de-escalation, escalation, leveraging, it's all going to play itself out. And when it does, we'll get back to probably our normal trend. Now, the markets are very skittish, and humans in their brain have a negative bias. You want, you want to protect yourself. What's that saber-toothed tiger coming around the corner? That lizard brain is still in all of us, and it's a natural thing to have fear, uncertainty, and doubt. But all three of those will subside over time, and then we'll see where we land. So, the oil shock has been a fear, but now with oil being up, inflation's not as big of a deal. Now it's slowing growth. The ISM services number came out today, and employment was way down, and like really depressed. Jobs came out last week, and the unemployment rate was at 4.3%, and the headline number, of course, was like 178,000 jobs created, which looks like a big number, but there was a downward revision in the prior month or two, and net for the first, I guess several reports there. The first 3 months of the year, quarter one, was about 60-something thousand jobs created, mostly in healthcare and education. Now, I'm not one to say, well, it's a bad thing that it's only healthcare and education. Yes, those are subsidized by the government. It's still job creation and puts bread on the table and money in people's pockets to pay for stuff and keep our GDP going. But there's been record number of tax revenue come into the IRS, and then about 20 billion more of refunds year over year to date. So money is flowing in and out of this economy, this large economy, the largest economy in the world. And all the uncertainty about inflation may turn into, well, are we having slowing growth? And then, of course, if we have slowing growth, and then we see this inflation report coming out this week, we have both the personal consumption expenditure, the Fed's preferred gauge of inflation, and they're meeting in like 3 weeks, by the way. and then the CPI report. They're both coming out this week. And so if those come in hot, which they're expected to do so, then it's before it was inflation and oil, and then it was, the economy slowing because of oil, and then maybe this jobs report with so many people dropping out of the labor force and wages coming down, wage growth coming down. It's still up, but just not as much. Work week down a little bit. But again, hundreds of thousands of people no longer in the labor force participating. The U6 report at 8%, up from 7.9. That's the overall unemployment. We know it's a no hire, no fire, labor market. So kind of steady, not exactly strong, if you will. And so then we get that report, and you think, okay, well, the economy is just kind of treading along, and if you get high inflation, we'll be talking about stagflation, by the end of the week. Which Jamie Dimon just put out his 10,000 word letter to shareholders today, the CEO of J.P. Morgan Chase, and he thinks stagflation is a problem. So as we get into this multipolar world, where multiple governments and regions of the world, the BRICS nations and whoever else, NATO looks to be kind of rattled right now. These alliances, if they start to shift and America continues to go on its own, we'll see how that shakes out into all this. Having said all that, time will tell, and this too shall pass. Hopefully this certainty comes in the straight opens. That's, I think, what everybody wants. And we'll see. And we'll be watching. We'll get back to you on Thursday night. Have a good one. Cheers. Hey, it's KP coming to you live from Newport Beach Peninsula. Here's my guy. It's spring break here. I was totally not present Monday, Tuesday until late Wednesday night. And I'm trying to be present until I hop on a plane and go to DC and hang with all the people at the MBA's National Advocacy Conference, which is incredible. Just got my lineup. Since I'm California-based, I have to meet with the staff and people. Alex Padilla, David Min, and Adam Schiff. So I thought that was interesting. I don't think he's going to be there. That would be really interesting. But the staffers are great, and looking forward to lobbying on behalf of the industry, along with so many others. Like 500 people going there. Okay, so what's going on? I am going to be brief, I promise. So don't hang up. Just sit and wait this one out. This is it's going to be good. So inflation. Everyone talks about inflation. When the Fed talks about inflation, they take a long view, a steady hand. They look through the tariffs, which so far have been nothing in a year. They look through oil shocks, which I don't think will be nothing, but they don't know. And so their preferred measure of inflation is the personal consumption expenditure. And so that came out today, and it was as expected. By the way, here's the beach. You can maybe hear some waves. It came in at 0.4 month over month. That's the second month in a row. That's hot. So 3% core, which strips out food and energy. And the headline number with energy and food is 2.8. So the thing is, it doesn't matter because it was basically before all the stuff going on in Iran. So what we don't know is the oil price shock, how it will impact inflation yet. Now we do get a CPI print in the morning. I'm not going to do another video. You're welcome. And which is basically really heavily housing weighted, by the way, but I'm sure it'll come in hot. But we don't have the oil price shock. We don't have the volatility. We don't have the food prices going up because of, fertilizer and trade and supply chains and all the things. We just don't have a lot of stuff. So unfortunately, like the market kind of looked through that report. And what they looked at was, will there be certainty for, Strait of Hormuz? Now, the Strait of Hormuz, open, close, I know everyone keeps talking about like it's a binary thing. And I've done a little bit of research through stock subscription analysis. And it's not binary because it's open. There are some nations that have negotiated like a toll booth passage, if you will. And there are other straits around the world that have a similar setup. The U.S. came out today and said, you are not going to do a toll booth. So that's going to be a sticking point. Of course, what Israel does in Lebanon to protect their borders
against Hezbollah. Again, I'm just stating what they're doing. I'm not trying to get political and say who does what. Like, don't throw all the flags out. Like, I'm just saying that was seen as a sticking point for Iran, which does have a say in this. I mean, they are trying to protect their 90 million people, and I'm not sticking up for them. I'm just saying this negotiation has a lot of points back and forth. So it's not binary, open, close. There are ships passing through. And so there's the Newport Beach Pier, and here's all the bars. I just took like 17 kids to go get ice cream. It was awesome. Ships are passing through. It's very selective. It's not an open international waterway like it was before. And that is kind of the sticking point, plus 10 or 15 points or whatever thing you read. It was 15, now it's 10, who knows? So everyone's looking at it. And if you look at the bond market, 10-year treasury got, again, into the 420 range. So what are they sniffing out? I thought inflation was high and this war is a mess and why are rates getting better? What's going on? There's still volatility. Had a fantastic dinner put on by Friday Harbor and Housing Wire last night. Had some mortgage industry leaders at a nice table at a restaurant in Newport Beach near the Fashion Island Mall. We got a great chance to hear Logan Motoshami speak. He's the lead housing analyst for Housing Wire. He's brilliant, a friend, really respect his work. And there's a lot of good things going on in housing. And I think all of us, I asked everyone around the table who's a lender, I said, raise your hand if you're with a lender. Put it down if this year is going to be worse than last year. Everyone kept their hand up. And then put your hand down if Q1 this year was worse than last year. Unanimous. So there's a lot of positivity. So I know we don't hear a lot about it. And this is kind of the place where we feed our lizard brain, which is super defensive and wants to make sure the saber-toothed tiger around the corner doesn't get us. But housing's in a good spot. The entire economy's not in a good spot. I get that. But this too shall pass. And so we're going to keep an eye on GDP came in, a Q4 read came in at 0.5 for Q4. So that's not good. So we're going to start talking about stagflation again, which I mentioned about a week ago. And the narrative will change. It'll always change to whatever the worst wall of worry fear that we'll have. Having said that, 163 million people are still gainfully employed. Rates are generally good if you're trying to buy a house. And, this oil thing will come to an end. I don't know when, I don't know how, but it will. So hang out your hat. Pray for you having spring break. And we'll catch up to you on Monday from Washington, D.C. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.